basically just want to touch on what I was trying to get out to you guys last night and early morning, because there's a couple important things out there that I think we need to be aware of, because they can get in the way. They could definitely get in the way. We saw a little bit of it today. Let me pull this up too. Come on, Twitter. There you go. All right, so let me start with this, and then we'll go over some of the action today and the good and bad of the current environment. All right, we're still from where we left off the last couple of these webinars, even on a Tuesday. We're still in the same climate. In other words, for me, the playbook hasn't changed much at all. There's been good news out of China and this virus. There's been some bad news. The noise has changed, but facts that we need to pay attention to. All right, and just to go over them again, and this is why I think there's us to change, the current playbook that we've been following over the past couple of weeks. This virus is obviously an unknown, okay? None of us are doctors. Even the doctors out there have no clue of, how this thing may materialize over the next couple of weeks, months, whatever the case, okay? But the market itself, okay, has been one thing crystal clear, okay? And it's been telling us that it's already factored in, okay, a hit, let's say a hit to global economy over the short term, right? Meaning a quarter, kind of what like Apple announced today, right? The market as a whole already is aware of that, okay? The question is, a bet on, and doesn't have to be right, but the market's more right than, okay, the market's making a bet that hit economically is going to be short-lived, okay? And not only is that hit going to be short-lived, meaning a V-shaped recovery, okay? In other words, the reason why the economy took a hit, the global economy took a hit and slowed down for a quarter was because of the virus and China being on lockdown. And as soon as they come back online, growth will continue right where it left off. Okay, so that's that V-shaped recovery. But here's the trick. The market not only is factoring that in, the market also, and this is why we can have continued to move higher up until today, also factoring in that all this liquidity, all this stimulus, okay, especially coming out of BOC, when they get back online, they're going to get back online with a bang, okay? And not only are you going to see a recovery in growth, but you're going to see some acceleration based off what the PBOC, which for those of you who don't know, that's a central bank, the Fed of China, basically, in simple English, okay, based on the measures of what they may take in China, okay? So that's what the market has been signaling to us. Whether you like it or not, whether you're not, it's kind of irrelevant, okay? That is why the market has looked, what is this? Hold on a second. This is why the market has looked like, right? Throughout a virus that's taken place and put China on. All right. Nobody, if I told you this would have been the case before this virus came about, you would have thought I was on crack, right? We're going to be, all right. But that's what the market does. It looks ahead. When we see and the obvious go down, at least a short-term hit economically, the market knows we already know this. They're not going to factor it in while we know this and allow us to benefit off public information that's available to everybody. That's not how this game works, right? It looks ahead of that. And that's what it's been doing. All right. So that's one, right? That's the interpretation coming out of price action. Okay. The other big important thing out there, okay, is obviously what I just mentioned in conjunction to what's going on with the virus scenario, and that's central banks basically worldwide pumping in liquidity all over the yard, okay? And in simple English, right, you don't have to understand the Fed balance sheet. You just got to understand what that means to the market as a whole. And what that means is it forces the risk assets, okay? That safety yield, right, off treasuries, or that safety yield off a bond, okay, is not enough at times when liquidity is flush. All right, so the basic premise, the basic takeaway when central banks are pumping liquidity and printing money, okay, that's what they're trying to do. They're trying to smoke players, investors out of their holes and give them no other option but to take risk. And that's why you've seen equities have done well. Bitcoin has done well, right? The riskiest of stuff has done well. Tesla, okay? So at the same time, we're seeing this now. China's coming on board and taking these measures. China didn't get involved in that to the economy, their economy taking a hit off this virus. Okay, so now that's a big added feature to the whole liquidity and stimulus mix. All right, so that's another plus. All right, interpretation there, in my opinion, is weakness is an opportunity. Okay, dip buying is in effect when liquidity is flush. Dips and pullbacks are short-lived. They don't last. Okay, because again, the market's flush with liquidity and they go and they flock to risk assets almost mechanically. Okay, and what you see a lot of times, you'll see like this, because it didn't start with this virus. If you remember, this was the Iran situation. Oh, where am I? Back here somewhere, right? I think this was the Iran situation, right? And this was supposed to be a debacle. It lasted 2 days. Okay, the virus, again, that's pretty significant, right? A major economy being shut down, on lockdown. And they came in like they saw Jesus Christ to buy that dip, right? So that's what happens when you have the central bank sink as far as liquidity. Okay, so we got the price action telling us they're anticipating a V-shaped recovery and acceleration of growth. Okay, and we have central banks that are money should rather quickly and find and buy dips. Okay, so now let's get the way. All right, and let's talk quickly and very quickly just about gamma. Okay, and without going into great detail, right? We know when gamma is up at a hefty level, right? When it's hovering around 1.5 billion, okay? The simple interpretation that we take away from that, and it plays a major role in this market, okay, is that dip buying is in full effect. Okay, so put another notch in the dip buying column. All right, a lot of people automatically assume that 1.5 or 2 billion SPX gamma means, all out bullish. And in a sense it does, because you get that chop higher, but it's not a fun thing to actively trade through. Okay, because you don't get as much movement as you would like. All right, markets gap up and sit, right? Markets open up flat, you get a dead heartbeat all day. That's hefty SPX gamma on the plus side. All right, but the biggest plus coming out of a big number in the plus column on gamma is dip buying. Okay, more than not, you really need some significant stuff to go down. You need a more powerful force out there, and there's not a lot of it in general, but you need a more powerful force out there, right, to take control for you to see significant downturn during market hours. can happen in the overnight session, right? We see that happen a lot. But during market hours, right, when they're doing all that hedging, for the most part, they either buy off the open, right, and you see a lot of chop and sideways action. All right, but again, the plus there, like the other two I mentioned, is that if you do get weakness, you have to try to lean bullish, right? You don't have to get sloppy bullish, but you lean bullish and look for long opportunities off dips, right? If you're trading intraday, instead of shorting in the hole after that fade, right, you want to nudge yourself to the bullish side and look for long entries because, yeah, not because I say so, but there are powerhouse forces at play in the marketplace that are forcing machines to do so. All right. So those three, I didn't even go into sweeper activity, sentiment, or any of that stuff. Those three alone, okay, tell you a ton about what we're dealing with this week. Okay. It will take, you will need to see something major. Is it possible? Of course, anything's possible, right? We've seen planes go into the Twin Towers, for Christ's sake. But there will need, here I go, Lewis, if you're out there, almost an exogenous event, all right, to get this market to really snowball to the downside in a big way. All right. And knowing that, right, if we know the probability of favor of that, then, you know, we can look through a different lens at this market, right? Like I said, gear up for a certain playbook. And that's what I think we have to do. Now, there are two things to keep an eye on, in my opinion, as we go into the end of this week. All right. Fed experts play a big part, especially on the gamma side. All right. That's another force out there, by the way, monthly expiration, right? Quad witching. But that could play a big part on the gamma end. Gamma can come off, you know, in chunks, just based off options expiring. All right. And we could end up starting a month with, you know, gamma under $1 billion, couple hundred million. And then, you know, like we just said, then you can prepare for some movement and volatility on both sides. Right? It's like you don't have that leash on. All right. But knowing that the upside, right, if you're going to chase green, you're going to run into stickiness. And the fades aren't going to have much follow through. You got to approach that type of environment the particular way, right? And that's what I wanted to make sure I get out to you guys before the market opened today. And obviously I botched it with my 40-second video. All right. So going back to the whole playbook strategy, right? What we've been discussing just in general over the last couple of weeks, it's, in my opinion, the best risk reward out there because there's not as much risk and there's still decent juice, decent momentum. There I go using my slang again. There's some solid momentum out there in specific names and groups. Okay. It's difficult to get a handle on how long that momentum may last. But if our playbook is calling for being tactical, taking those profits when you have them, right? Don't get caught up in chasing, you know, especially Wing Sung want to give it a leash. Don't go chasing moves because it may not be there long enough for you. And I think that playbook just applies to the whole shebang of us this week. All right. You're seeing the moves. Again, if you're not getting too sloppy, and even if you're getting sloppy, you're getting away with it in quite a few names. All right. But if you've been playing a smart hand, even the names you guys like to play, right? And instead of chasing green, maybe look for a day it's red and look to flip from red to green and that sort of thing. There's been some nice movement out there, right? A lot of names that I didn't even get my hands on, that you guys I know on because of the the last couple of webinars we did, right? Like the Zoom video. I mean, what I tried to do was I tried to get involved intraday a couple times. That's what I did late last week. I made a little bit of money on one of those days. And today, where I couldn't get my hands on it, that's the day she had the nice pop, and a profitable one, right? Yeah, just AMDs, the Netflix, the Netflixes of the world. And here's the thing too, okay? If not everybody could do it, but if you can trade intraday, right? If you can day trade and you wait for certain scenarios, right? Not all of them are going to pan out. And that's what you got to understand that as a day trader anyway. But you wait for the name you like to catch enough heat or to catch that sweeper activity. There's been so many of the names that you guys like to play, from a Netflix to an AMD to even an Amazon, and just climbing the ladder. Every little dip gets bought and red to green ad nauseum. All right, so that's what the whole tactical approach means. Play that way. I understand that. I'm not trying to explain it over and over again to those of you who play tactical, period. But I'm talking to a lot of those of you out there who rather swing something for a couple of weeks, a couple of months, and try to catch that larger move. Okay, the problem with that is we're at a point that when that, even if it's a short-lived pullback, does show up, and you have a fistful of calls, right, a bag full of calls in names that look like Apple, and a lot of them do, it's going to sting. It's going to sting. So it's like that grind, slow grind higher on the way up, and then when they get punched in the jaw, there goes all your premium. So you kind of want, what we're trying to do is buy time and wait for more and more of those setups, better setups or pullbacks to appear. That's the whole goal here. Okay. Some setups are, or some of the names out there that we've been playing are already set up. They're off a pullback. You know what I mean? But those of you who like names like AMD, you missed that entry, right, off this little breather here. And now, for a swing, now you're chasing, right? I mean, you're chasing up here now. You can day trade it all you want, but if you're going to start a position today and you want to swing it for the next 3 to 6 months, you get caught in something like this and you're playing top tick, you're not going to be happy with that. You probably won't even survive that. You won't even survive that. So what you're looking for, you're looking for the other setups that already pulled back and are catching, flow off a pullback. You get a better risk reward there, kind of like we saw quite a few of them. You don't want to put too many of those on either because we want the market to do something similar. But you got an FLT, boom, gap down, catches a couple missiles, different story. At least it got its punch in the jaw, if it makes sense. So that's what we want to try to be patient for. And there's a reason why this is the playbook right now. So we don't get caught when you're quick, right? When you're tactical, you're not going to get caught sitting 8 to 10 positions deep, right? Maybe some of you, it's only 3 to 4 positions deep, okay? In calls that one pull wipes them all. Right? And then you're behind the 8 ball into a correction where, that's where we want to be ready, right? That's the sweet spot of this whole thing. right? These things right here, these end up being the sweet spot that reel in the bears, get the squeeze going, and get a whole new batch of names to get hot. Like that chart I showed you in 2013, there were quite a few of the pullbacks that look like this. And, then set another move higher. Okay. The other tough, difficult thing about what we're experiencing now in this market is the rotation. Okay. Everything's not participating on a day-to-day basis. So it's not like you could just throw a dart at any name you like and it's going to look like some of these tech names. All right. We may even start to see, I'm sure eventually, some rotation out of these tech names, right? Like the semis are going through right now, some of them, and into other groups. So that doesn't make this game any easier when you got to worry about, what group is catching rotation, what group they already rotated into and it may be late, that sort of thing. All right. So that's why tactical is the best approach. There's nothing better than when you get a nice pullback. Okay, we all want it. That's why we're not getting it. But there's nothing better than getting, the market consolidating or getting a nice pullback. You reel in shorts, you get the bears fired up, and there's a whole new batch of initial activity breakouts. Names that are coming off pullback, they are just starting to catch heat. And, you can buy something 3 months out and you don't have to worry about going to take a piss and coming back and they rotate it out of it, right? It's just, the game's a lot easier off of that than where we are right here currently. All right. But on that note, quickly, okay, because otherwise what we would do is, right, a lot of times we would just, hey, okay, I would just sit and be totally patient. And I'm being extremely selective anyway, but I would be totally patient and not hold anything overnight up here, even for a quick flip for the next day or two, and wait for that pullback. And until I get that pullback, I'm just solely going to day trade. Okay, that's primarily what I'm doing now, but there's enough juice out there right now that even me, where I have to give a name an extra day or two because it's catching legitimate action and there's a lot of momentum and it's worth looking for the follow through. All right, so here's an example of some of today's action. All right, the top action out there. And for each and every one of us, it may be different, right? You may like this name, I may like that name. I don't like the spot here, you like the spot there. All right, so it's all a preference thing. All right, but this, in my opinion, today was some of the better order flow out there on the bullish side. All right, so Amazon. I know a lot of you guys out there and gals out there trade this name up, down, sideways, crooked. You couldn't give two shits, right? You like to trade Amazon every day. You come in and you're always talking about Amazon. All right. If you see sweeper activity like this, right, and you day trade Amazon anyway, or it's a name you like to trade, this is legitimate heat at the least for an intraday trade, at the least. When they come in and you're seeing, 3 different orders in Amazon and call spreads, we could go months without catching an Amazon order. Okay. So, that action is not too shabby. We're not talking about junk, right? 6-figure sweeps. We're talking about some decent action. This MDB, some of us got lucky with this thing today. Okay. Caught some solid activity here. This is a name that doesn't catch a lot of sweeper activity. Software name. They're unconscious right now, right? You guys know this MDB anyway to begin with. I know because I got several questions on it. Let me open up my other chart quick. All right, so you can see, look, setting up for new highs, kind of what we've been seeing, right? And a lot of these names, just setting up for new highs and busting. All right, but some of us who just even wanted to play tactically, it was worth a shot. Equity, calls. I know Tim played calls out there. He had a nice hit. But we got lucky too, because I think it was Josh Brown who pumped it on CNBC. Somebody pumped it. Oops, hold on a second. All right, so you had this pop right here. Okay, so here's where it caught sweeper activity. You could see where it started to move, right? Started to push, and then caught a CNBC pump. And this is what I'm talking about, juice. The market wasn't doing anything special, but you had some juice in this name, right? Look at like Amazon today, just to get an idea. A lot of these names had, right? Market like this, but Amazon, had a nice, strong early afternoon before it faded in the last maybe 15. Okay, that's what I'm referring to when I mean juice, meaning that not everything is sticky and alongside the markets. Okay, there you can find alpha, right? You can find outperformance in some individual names and groups. Oops. Let's see, what else did we catch today? I didn't play any of this, but if you like the name, Lyft, all right? We know the whole story there. Uber, a lot of us played the Uber off some real nice action. A lot of us complained about not making enough money off all that action in Uber, okay? And what happened was they reported a solid quarter. Lyft moved off Uber's number. And then, like you see so many times, right, this thing rallied off Uber's results, and it was set up for disappointment going into their own results. They really had to knock the cover off the ball for this thing to trade higher, because it moved off their main competition, right? So here's earnings. This is what you waited for. Whoop, went south to the bottom of the range here. July's. You're not chasing Apple or Shop or Tesla or Space. This looks nothing like that, right? You waited for earnings, you got a dip. These are July calls. If you like the name, throw it out the window. Throw it out the window. But this is not a bad setup in Lyft, right? If you had your eyes, you're ever going to look for an entry on Lyft, I don't see any point in waiting any longer. What else could you be waiting for, right? You were probably worried that this thing was going to pull an Uber and gap and go off the earnings, and you miss it completely. And so again, if you're interested in the name, if not, you part as friends, you let it go, and you wait for something that really forces you to buy it right now in this environment we're in for a swing trade. Glue. This was at a better spot. This is one of those cheap names that I would like to build a tuck away position in. All right. They are technically software. Okay. They are involved in, I think, mobile gaming primarily. I played it once before a while ago. That's how I remember this. You can see off a little lift here. I think it was earnings off a lift. I like that Zoom setup. Okay. So if you missed that, or you never had a chance to grab it there, whatever the case, because of earnings, you kind of want to see that breather here, right? Kind of zoom. And then you're playing for the bust out. Okay. That's more of a trade setup off this thing. I have an interest in it because it's in that software sector, okay, maybe just starting to get noticed. And I would like to have a little position in it and kind of try my best to forget about it, if that makes any sense. So that's how I'm approaching, or at least attempting to approach, this lift. All right, but I'm going to be patient. I bought a little of it. Let's see, what the market looks like. Maybe going into next week with the whole and sentiment and all that stuff. But that's my intention on something like this because it's cheaply priced and there's just better things out there to trade, bigger movers, right? Like the one I missed. Anybody buy that? I forgot the symbol. PC. What's the name of that software name? That just caught a missile, pricey, big mover off a pullback. Is it P? I get them confused. PCTY. No, that's what I thought it was. No, Paychecks is a nice name too, John. One. There's one more name with a P. Something call. That's it. PAYC. I get them all confused. You know. Here's the dip. Like this is the stuff you want to trade, because they're just bigger movers. Boop. And they hit that dip hard. They hit it actually right here. What am I circling? And never had a down day off that dip. She was red. Oh no, I think she went red to green, then closed near the highs, and then just been up ever since. Yeah, pricey stock, but pretty impressive move already. But yeah, you see all these names? All these names, they're on fire. PCTY that you guys mentioned had some real nice action with time. A lot of good-looking names in tech space. So that's my intention on the glue. All right. I know I'm surprised. Maybe you guys have asked me already. I used to get a million questions on this stock, BlackBerry, for so long. I can't. Okay. It doesn't move enough for me to trade it. I've seen flow in it sometimes, and it gets that pop on an upgrade or something. Let me see if I can show you something like this. You know, something like this. Okay, but you got to understand it's a cheap stock, so you got to look at it per. And you're not looking for a stock like this to by the beginning of March when those expire. All right, so I'm not a big fan of it. You do have earnings coming up. That action's not earnings related, so maybe playing a earnings run up, or maybe there's shorts that are protecting against an earnings run up. You know, I'm not a big fan of the name because it's what's that other name that catches action like this? Those cheap, old, well-known names that they never move. It's stale. That's a good word. It's stale. Like for me, you know what it is, John? Like this type of action, you're rolling the dice trying to catch news, and maybe you could get lucky. Like that's what you need in this name. You know, you need some sort of upgrade or some news of a deal with somebody, and you hope there's enough gusto behind that push to make enough money. So again, that's just my opinion, but if you guys, you probably know more about the name than I do, so don't let me talk you out of it. It was half decent spec action throughout the day, right? So you want to show up throughout the day. They weren't just stuck on one price or one rumor. So you had that aggressive nature. But keep in mind, it was cheap action. You know, it's spec action, 30 cents, 20 cents, shooting for some sort of headline, in my opinion, or upgrade. What else we got here? Vive. This is more my style. Okay. You have earnings March 3rd, which becomes the biggest problem for this name. All right. If you, and the problem with it is, even if you think you have enough time for a run up to trade before earnings, you really don't want September to help out in the momentum department, you know, unless there's enough of that action. You would hope for a lot shorter dated than that to get the thing moving. But this is a good looking order. You know, it's a good looking order. All right, VEEV. A lot of you guys know this name. Strong name. It's been a good looking name for a while, right? Oops. Jesus. So you got breather coming up the right side here. Side. Looks good. It looks good. If you're looking for a trade prior to earnings, maybe you get that little pause and breather here. Again, similar to what we saw in Zoom, and then she gives it one big whoosh. All right, but you got a good looking bet. You have earnings in the way, in the right group right now. This is the group catching all the heat. They're moving the best right now. So keep an eye on it. And, maybe you see VEEV down a couple bucks, right? Down day or some profit taking. Maybe that ends up becoming an opportunity for you for a quickie intraday, or you're looking to flip over the next couple of days. But more importantly, you caught a nice sweep, and keep the name on your screen because they could show up again and support this. Okay, VEEV. Transaction, this is the last name on the list, JD. There's been a ton of momentum there. We saw a ton of action into BABA's quarter, if you remember, in JD. Okay, a lot of sweeper activity was playing JD rather than BABA into BABA's earnings. And this stock is just killing it right now. Virus, right? You got the virus in China. They've benefited tremendously off this virus and people being on lockdown. That's where everybody's ordering stuff and buying stuff. JD's the only one who was working, had the doors open throughout this process and delivering stuff to people's homes over there. All right, so that's why this thing has been hot, and they're most likely kind of expecting some talk or maybe guidance on what I just mentioned this coming quarter, which is showing here 227. Same thing. What I would keep an eye on is if you get some sort of pullback prior to earnings. Okay, a lot of times you'll see JD sweepers come in supporting into the weakness. You could get a quick trade out of it. Otherwise, it's an earnings play, basically. It's an earnings play. If you like it and they sell it post earnings, kind of like what they did with the lift, then you have an entry there. That's what you want to look for. If you like a name more than just a trade, that's what we kind of want to focus on, right? We've seen it in Home Depot, right? Some there a little earlier on, right? Target had some of that action, not as much as I would like. It was a put seller mostly, but starting to bounce a little bit there. So you kind of want to wait for this to show up. All right, anybody have any quick questions? Otherwise, I can talk for another hour here, but I got to get out of here. I got to bounce. Gamma, yeah, what happens is C-Train expiration, all right? So we got Feb monthly expiration, okay? It's a big expiration. What happens is Gamma can come off. So in other words, if they don't roll positions in SPX, you could see Gamma, going into that Friday at 2 billion, and then we go into the new monthly expiration under 1 billion. You understand? So you can have Gamma come off without market weakness through expiration. And that can loosen things up. So if you guys, there's a lot of information on Gamma, Google, on the web, okay, but when you understand the basics of it, and that's all you should really to start with anyhow, entertain yourself with the basics of it, you understand the mechanics of why this happens. Why when Gamma's up at a lofty level, dips get bought and they sell into any extension on the upside. But net, you get that bullish grind. You get that bullish grind. All right. So now with expiration week, right, you got pinning and the whole 9 yards. the majority of movement is going to have to come in the overnight session, and don't let it reel you in just automatically, off the overnight noise. You're really going to need, see, from the Gamma gang themselves, like what the Gamma aficionados are looking for out of this, if a major move is going to manifest out of this pullback here, you're talking about, remember the last top where there was a pull, the Iran situation, okay? You're going to have Gamma, they chisel away at it, okay? So all of a sudden your 1.5 billion comes down to 1 billion, then back up to 1.2 billion, then back down to 800, right? And over the course of a couple days, rather than one big whoosh. So you'll have time to adjust and be prepared for it. Okay? What Gamma allows you to do, following Gamma, what it allows you to do is sidestep that big volatility event, or even participate in it with higher odds of it. You understand? That's what Gamma generally allows you to do. Okay, when Gamma is hovering around neutral, okay, you have big movement out there, a lot of volatility out there. Think of it like I mentioned a lot of times, the leash, there's no leash. Things can get dicey either direction. But when you have Gamma up at over 1 billion or 1.5 billion, it's the opposite of that, right? Think of it as a short leash, and you get pulled looking to make a move in either direction. Yes, 50 Cent, good call, Martin, did add to his VIX position, okay, for March. I'll post something on my regular Twitter about that, details of the order and all. All right, actually, I could pull it up because I have trade alerts blurb. Hold on. Oops. For those of you who weren't around, that was probably the most bearish thing today that we saw was probably 50 Cent. 50. Everything else looked like, protection, small put sweeper activity, not really, any follow through or aggressive nature behind the put action. There was buying, obviously. I showed you the top bet list, so there definitely was buying. Hold on, let me put 50 Cent. 50. Oh, now Wall Street, Jesus, come on. SL. You gotta be kidding me. There we go. This is from Trade Alert, a little write-up on it. This was the actual order. Look at that. Peanuts. And, oops. And this is, we can read it quickly, what Trade Alert's take on it was. March 24 calls, cash up nearly a point to 1460 this morning, blah, blah, blah. Nearly 250,000 VIX calls trading in the first hour, 3 times normal, led by a gigantic 150,000 March 24 calls bought for 48 cents. Block appears to add to 100,000 bought Wednesday, if you remember, and 50,000 Thursday. So his total position now is what? Does it even say here? It doesn't say here. It's pretty hefty. How accurate is he? That's a good question. You're not playing 50 Cent VIX calls and being as accurate as you would like him to be. He's caught some nice winners, okay? And if you manage your risk properly, you really only need one of his winners to be profitable off that particular strategy, But he has been a good indicator as far as volatility coming into the picture, you know? So a lot of times what will happen is the market will you'll start to see volatility and it's not that bigger, larger move, and he'll roll them out. You know, he likes to roll them out if he's early. See, so that's a luxury that, you know, a lot of us, you know, we don't necessarily do. We don't like to do. Some of us will roll out winners, right, and leave a piece. But what a lot of these sharpies do playing with size like this, they need to be early. A lot of times they expect to be early, okay, and they just have that belief, that confirmation, and more importantly, the ammo, right? You need the bullets to fire. That's the most important. To continuously just push them out and push them out. And, you know, when that move comes, if you're right, you're going to get paid. Now, I would tell you simply this. If you took that approach on the long side, rather than betting on the downside, you'd have a great strategy, right? So don't get all reeled into freaking 50 cent when if you took that same approach on pullbacks, most likely retired in a year. Think of that. All right. But we don't really know the story. I had a write up on him. You know, is he hedging stuff? Is he just straight up cowboy gambler? You know, we don't know the details. We don't know the details. You know, and that's the difficult thing with, I don't follow VIX flow. I don't follow what goes on in the VIX bits every day. You know, because there's a lot of non-directional play there. There's a lot of hedging there. Yeah, and that's what it is. With a lot of money out there, okay, they have to chase because they're you know, when you have clients, you have to own stuff a lot of times. You know, you have to own stuff. And client money, it's a lot easier, you know, to be a part of things because you're not putting your personal money all at risk. You're putting client money at risk. And I'm telling you from experience, like if I knew all my clients owned Microsoft at other brokerage firms away from me, I had to be bullish on Microsoft and own it for my client. If I didn't, I'd lose those accounts, especially if I was wrong trying to get cute with something else. Yes, right? And that's a perfect example, right? So you have like the long volatility ETFs, just look at them over the years, right? They're in shambles and reverse split 685 times. All right, so if you took, everyone gets gassed up on, I don't know why, but on the dark side, the downside for like 50 cent. If you took that same approach and applied it to the bullish side off pullbacks, you know, on pullbacks, you'd be amazed at your results. You'd be amazed. But, you know, people instead get wrapped up into this, especially on pullbacks, and they miss the easier trade out there. The easier trade. All right, but I'll repost this Twitter for those of you who want to read through that, and I'll get maybe a total position that he has there. All right, so I'm gonna get out of here now. I appreciate you guys stopping by. All right, just to sum it up, this week there might be some movement or some headlines overnight. All right, but be prepared and expect that stickiness, dip buying in full effect mentality up until expiration, right? Next week, maybe a whole new can of worms, and but we have to expect that if things start to change, we're going to see it change likely over the course of a couple of days. So it's not like you're going to miss the whole move on one big bang with Gamma up at 1.4 billion. The odds of that happening, slim. Possible, yeah, but slim. All right. So that's why, you know, we want to be tactical. We want to utilize weakness to our advantage, right? Because that's my takeaway, my main takeaway. up there over $1 billion like that, buying is in full effect. That's the first thing that enters my head. So if you see weakness, you want to try to, use that to your advantage, whether it's intraday or you're swinging stuff tactically over a couple days. If all the forces at play are buying dips, you want to be a part of that. All right. And for those of you who are members, if we see things start to change, I'm going to be hollering them out at you and writing them up post-market. All right. So we'll cross that bridge when we come to it. And we'll see how the week plays out. I'm amazed at, and I'll leave you off on this note, okay? And, when you rig the game, this is what happens. You think about, like, this is where things really started to heat up with the virus and thing, and you had this big gap down. Look at this is FXI. Look at that. Right back. And EEM as well, and you had bullish sentiment signals there. So we'll see how this plays out. It's going to be interesting. It's interesting because nobody knows what this virus is going to turn into. But if it does play out to the bullish side, you're going to see a lot of parts on the stuff that's been left behind and hit off this virus crap. I can promise you that, with all the stimulus and liquidity out there. So it could be some fun times. All right. Have a good night, everybody. I'll see the majority of you mañana. Be good, guys.